welcome back to our YouTube channels. Our topic for today is understanding the futures trading fees and commission in Malaysia. Now, this is a common topic being asked by many of the beginners. So today we are going to go through what are the commission or trading fees involved in Malaysia when you trade futures. Because don't forget, when we trade any products that we are going to trade, we need to look at the net profit, not the gross profit. Net profit meaning that from the gross profit, you need to minus off the trading fees and commission before you derive the net profit. It is going to affect your net profit itself. So it's very important for us to understand what kind of trading fees and commission involved in Malaysia futures market and what are the impacts. For example, what kind of percentage compared to the profit that you are going to make? Because this is very important. Whether we are going to make a profit even within a tick or we need a few ticks before we can generate a profit. So let's start with our topics for this evening. Now, before we get started, first thing, if this is your first video, please remember to subscribe to our YouTube channels and on your notification bell. My name is Ting Ting. Now, as usual, before we start, we need to do a disclaimer. Our topic for today is only meant for education purposes. There's no buy or sell call. Now, before we move into understanding what kind of trading fees and commission involved in Malaysia futures market, we need to understand what are the terminologies used when it comes to trading fees and commission. Terminologies meaning those commonly being used term. We need to understand this particular part. Now, first thing, we need to understand what is overnight, what is intraday. Now, some of you say, hey, when it comes to trading or trading fees or commission, why we still separate into overnight and intraday? Just for information, many of the products and many of the brokers, they separated by products. They are going to charge you differently if you're holding an overnight position or you're holding an intraday position. Meaning, if you're holding an overnight position compared to if you're holding an intraday position, the commission charges will be different. I wouldn't say that it's across the board, but many of the brokers, they are going to differentiate the products itself to differentiate in terms of overnight and intraday trading. Now, what is overnight trading? Overnight trading meaning you open a futures contract, eventually at the end of the trading days, you did not close it. You carry your position overnight. You carry your position and sleep with your position itself or the contract itself. This is what we call it as an overnight contract. Now, overnight contract, the trading fees or commission will be relatively higher compared to intraday. Now, another part is for this intraday. Intraday, by the terms itself already telling you that intraday meaning if I buy today, I sell today before the end of the trading session, this is considered an intraday position. Now, intraday position, the commission rate tends to be lower compared to overnight. But please listen carefully. Don't because overnight commission is higher, you decided that, hey, must as well go for intraday so that I can save the commission. Don't do that, because whether you are going to go for overnight position or intraday position, it should follow your trading strategies and system. It should not because of your commission itself. This is the first part. Second part, you need to understand that the commission charges in Malaysia, especially when it comes to futures trading, is very low. If you compare to the profit that you can make, it's relatively low. Now, I'll give you how low is it later I'm going to share with you, but basically within one tick, you will be able to cover it. Later I'm going to explain in details for you. So you need to understand whether you're holding an intraday position or overnight position because the commission charges will be different. Upfront, your brokers will let you know how much they are going to charge for intraday, how much they are going to charge for overnight position. Now, another term that you need to understand is round term, because some of the brokers, they are still using this term called round term. Round term, by the English term itself already mentioning or define these terms easily. Now, round term meaning if I buy, I sell, you're making around. Finish everything. You buy already, you close your contract. You need to buy, you need to sell. If you start by selling, you need to buy back, meaning you close your position. This is what we call as rounded. Because some of the brokers, they will charge you per contract basis. Some of the brokers, they will charge you rounded basis. So in short, if you are being charged per contract basis, your rounded is you need to take per contract times 2. Why times 2? Because you definitely need to buy, you need to close the position as well. You need to sell, or you start by selling, you need to buy back. So this already considered as 2 contracts. So 2 contracts we consider as a rounded basis. Now, give you an example. For example, for FKL, let's say if the broker is telling you that if I'm going to charge you intraday is 13 ringgit Malaysia per contract, or some of them they're using per site, 13 ringgit Malaysia, the same thing, contract per site. So if you take 13 times 2, you buy, you sell, so this will be $26 will be rounded. So you need to understand whether your commission, you are being charged per site, per contract, or rounded basis. Now for overnight, commonly they will be your futures contract will be charged higher in terms of the commission or brokerage because many other reasons, like for example your trading fees or clearing fees might be higher when you hold overnight, so sometimes the brokerage will be higher as well. So but don't worry, intraday or overnight the charges difference is not that high, maybe $1 to $2 or maximum maybe $3. So overnight per contract, let's say for example is 15 ringgit Malaysia, so per site is 15 ringgit, so you times 2 will be 30 ringgit per rounded. So either way they are going to charge you, for example is per contract, per site, or rounded. You need to ask carefully in terms of this. So these are all the terminologies that you need to understand. The next part, we need to understand what are the transaction fees involved. It can be trading fees involved. Many terms looks quite similar. I'm not really able to differentiate it, but I'm trying to use the terms in many of the statements, or those terms appearing in many of the statements or at official site. What are the terms that they are using? Now, they separated into the commission and fees, which encompasses your exchange and trade or trading fees, your clearing fees, and your commission. So exchange or trading fees and clearing fees charged by Bursa Malaysia itself, the exchange itself and the clearing itself. Then the commission is being charged by your brokers because they need to charge you because many things that they need to do. So these are the 3 parts. Now, the last part definitely unavoidable is your SST, which is currently 8%. But the good news is SST is only applicable to commission. They don't apply to your exchange or trading fees or clearing fees. They don't apply to this. They only apply to your commission. So let's say, for example, if you are being charged 15 ringgit Malaysia, 15 ringgit Malaysia, they encompass this exchange, clearing, and commission. If the commission is only $10, the $10 will be subject to 8%, the SST. The remaining, like $5 for the exchange and clearing fees, will not be subjected to SST. Now, let me show you an example. Can you see this particular part? But before I continue with this example, I just want to let you understand that all the fees will be charged differently for different products, different brokers, and even same broker. Sometimes their licensed person might charge you differently as well, because many of them, they are individuals. Some of them, they attach to the company itself, so you're going to see that it's different. And it depends also on the number of contracts that you are trading. The more you trade, the better you can negotiate for your commission to be lower. But generally, you can see that these are the commission being charged. I'm taking the high side in the industry itself. So let's say, for example, your exchange, trading, clearing, and commission, if they mention to you is $15 per contract, then we need to times 2 because you need to buy and sell. So that is 30 ringgit Malaysia. Then out of this 15, we need to see how much is the commission itself, because only commission we are going to subject to 8%. Now, let me show you one of the example. This is the actual statement. And you can see that, for example, the commission being charged is 8 ringgit Malaysia. The clearing fees being charged is 1 ringgit Malaysia. The trading fees is being charged at 216 per contract. So if you total this up, these are all being excluded from SST, your service tax. Only this $8 you need to pay for SST. So you take the $8 times 8%, this comes up to 64 cents. This is your service tax that you need to pay. I repeat, your clearing fees and also trading fees, you are not subject to 8% of SST. Now, so this summarize itself, if you are being charged per contract is 15 ringgit Malaysia, you times 2, so this comes to 30 ringgit Malaysia, and your commission, let's say for example of this, is only $10 is the commission. We need to take the $10 times 8%, then we times 2, which comes to $1.60. So total your cost in a way is 31.6. So you need to calculate your net profit, assuming our gross profit is 250. So your net profit, you need to take your gross profit minus of any fees involved or any cost involved or any transaction cost involved. So 250 minus 31.6, this comes to the net profit of 218.4. So notice that in Malaysia, basically one thing, you'll be able to cover all your costs. So it's easier for you to make profit. Not many products in this world that you can use one tick by one tick, you can cover your commission. And for futures itself, you can do that. And don't forget, the more you make money, even this is only a small fraction of it, it might not affect your whole trading performance. So long as you can make money, this all commission is a small matter. So you need to understand your net profit need to generate from your gross profit minus of all the transaction fees or all the trading costs involved. So this comes to the end of our session. Just remember that whenever you go for any account opening, you need to check with your brokers whether you are being charged per contract, per site, or per router. And you need to also understand, is there any hidden cost? I wouldn't say hidden cost, but some of the trading platform, they will charge you. Or you need to add certain services, they are going to charge you as well. And common question will be, is there any lowest commission rate in the market or not? Sometimes the lowest is like they don't give you anything. If you need services, you need to pay slightly higher. So there's a give and take. So most important thing is you need to understand. It's like today, whether you need to take AirAsia or you should take Mars, is very depending what you need. If you do not need the luggage, you do not need the services, you do not need the F&B, etc., you might go with AirAsia, for example, because the money that you need to pay is relatively lower. But if you're a person that you need services, you need human touch, you need people to help you to do certain things, maybe you are willing to pay for a higher commission. So this comes to the end of our session for this evening. Remember to subscribe to our YouTube channels and on your notification bell. I'm going to see you in our next topic. My name is Ting Ting. Bye-bye.